So I want you to confirm that you can also see what is displaying on my screen so that to carry everyone along. Is it showing at your end?
Yes, sir.
Okay. Yeah. Good evening once again and welcome back to our advanced taxation class. So last week we started with basis of assessments and uh, during the course of our class, we tried to touch base on the new business, the commencement rule. So, but due to the timing, we couldn't really do much exercise. But because of the new person that is joining this evening, let me just quickly try and recap what we did during the last class. So, when we are talking about assessment, what assessment basically means is that an official computation of what a taxpayer is expected to be paid during a relevant year of assessment to a relevant tax authority. And we have various type of assessments. We have self-assessments, we have best of judgment assessments, we also have a provisional assessment, we have default assessment. So all those ones have actually been discussed during the last class. And we also uh, discussed about how we can object an assessment that is being raised by any tax authority and the taxpayer seems not to be comfortable with that assessment. So we have discussed the processes and the procedures that such taxpayer needs to follow and what are those things that needs to be done in order to ensure that the tax appeal tribunal uh, will also be able to give such taxpayer an hearing or uh, a fair judgment as well. So you may try to revert to what you have done during the last class so that we don't waste our time. Now, we are going to continue from where we left from our last class. And when we started with the assessments, we actually discussed about the new business that okay, when a new business is just coming on board, how we such new business, how we such new business carry out an assessment. So when a new business is just coming a into an operational activities, there are three rules that basically guide how such accessible profits will be computed. So the first rule is that from the Finance Act 2020, so the way we carry out our assessments is quite different from how we are doing it prior to the period that we have that Finance Act 2020. So the first year, so what I'm saying now is that I'm actually referencing to Finance Act. So when we just commence a new business, in the first year of our assessment, it has to be from the date of commencement to the date of the accounting year end, which means whenever you are registering with any relevant tax authority, you must have indicated what your year end would be. So when you are able to identify that, that is what they will also use to profile your company on their system. So then when you are also about to file any returns, so that date is also very essential because that is what will be used in performing an assessment of that company. So, and for the second rule now says that we have to start from the first day beginning after the year end of the first accounting period. I don't know if you understand what I'm saying now. So what I'm saying invariably here is that if your commencement date, if you commenced, if you commence business, let's say on the 1st of July, right? And your accounting year end is, let's say, November 30th. So what the first rule is now saying now is that in your first year, in your first year, it will be from 1st of July to 30th of November. So let us take, for instance, that this is 1st of July 2020. 2020. So which means your account first year of assessments is going to be 1st of July 2020 to 30th of November 2020. But there are some instances whereby in the year that you commence that business, you may not really be able to get your accounting year end in that same year. Let us look at this scenario. Let us assume that you commenced your business on 1st of July, and you have already set, you have already decided that your accounting year end, let's say you commenced business on 1st of July 2021, and your accounting year end is, let's say, April, 30th of April. You know, there is no way you can backdate this July to April. Are you getting it now? Because you have already passed this month. This month has already passed before you even commence the business. So, which means in your first year of assessments, it will now be from 1st of July 2021 to 30th of April 2022. So this is what your first year of accounting will be. Why the second rule now say that first day after the end of the first accounting year end, your first accounting year end was 30th of April 2022, and the first day beginning after the end of this year end happened to be what? 1st of May, right? To then your new year, then your year end again, which will be 30th of April. Then for your third year, you also say that the first day beginning after the end of the second year to the end of your accounting, till the end of your accounting year, which means your third year, this is the first year, your second year, and our third year now will also be what? 1st of May to 30th of April. Are you getting it now? So that is what the rule is saying. Then subsequently, we now start applying the preceding year basis. So we have actually discussed all this during our last class, and we are going to take a question. We are going to solve a question today. So I want to confirm, do you have your calculator with you over there?
Yes.
Okay, cool. So this is what I'm going to do here. Let me add another. Okay. So I'm going to copy questions from here. This is our question. So can you see this question? Is it legible enough? Can you see it properly? Kindly confirm if you can see the
Yes.
question, please.
Yes, I can see the
Okay,
question.
yeah, thank you. Okay, thank you. So the questions read thus: Wazobia Nigeria, Wazobia Nigeria Limited was incorporated on 1st of July 2019. And whenever you are doing anything that relates to scenario-based question, please try to be conscious of the date so that you don't pick a wrong date. See this question again. Wazobia Limited was incorporated on 1st of July 2019, but did not commence operation until 1st of February 2020. And the company's directors have decided and approved to make its first accounting year end to be 31st of July annually. The following information relates to Wazobia income statement period to this. So from this question now, when did this company commence business operations?
1st February 2020.
Exactly, thank you. 1st February 2020, because the law did not say that when the company was incorporated. Are you getting it now? So the law specifically states that you start from the date of commencement. So now we have our commencement dates to be 1st of July. So we may just even write the dates out. Commencement dates, 1st of July 2020.
1st of April, sir.
Account,
1st
oh,
of
sorry,
February,
1st of
sorry.
February, sorry, 2020, while our accounting year end was 31st of July. So now we have been able to identify the date that we commence the business and then our accounting year end. So we have period to 30th of July 2021. One thing I want you to understand is that anytime you are seeing period to, know that such profits relates to either 12 months. I mean, it relates to either more than 12 months or lower than 12 months period. Why I'm emphasizing on this is that because uh it's also going to be useful to us when we are doing our cessation and then the change of accounting dates. Are you getting it now? So what it then means is that this profit that we have here is either it is up to 12 months or it is more than 12. Is either it is lower than 12 months or more than 12 months. So that is when you'll be seeing period two. For instance, whenever you are preparing your financial statement and the financial statement is now reading for the period ended, what they are trying to let you understand is that that financial statement might be prepared for more than 12 months, or that financial statement relates to financial information that is lower than 12 months. So that is on that. And the following information relates to Wazobia income statement. We have period to 30th of July 2021, year ended 2022, 2023, 2024. So you are required to compute the accessible profit for the relevant years of assessment. So whenever you are computing your assessable profit, so the first thing that you have, we have what we call basis period, and I've also explained that during the last class, right? Okay, so we have our year of assessments. Then we also have basis period. And we also have accessible profits. So if we want to do any calculation, so we can also put that one here. This thing is not straight though. What will I use? Okay. Okay, so in the first year now, our basis period will start from what? Our basis period will commence from what date to what date? It will commence from what date to what date?
From 1st of February. From 1st of February to 31st of July 2020.
1st of February 2020
to 31st July 2020.
So I may need to rub this one. So we have our accessible profits here. So if we have these dates here, right? So when is it going to be our year of assessments? Because I also
2020.
explained this. When?
2020.
No, our year of assessment cannot be in 2020 because your year of assessment is basically 6 months after your year end. Your year end will now be what? It will now be 6 months after this, which is going to fall in January. So our year of assessment will be 2021. Do you get it now? Our year of assessment will be 2021. So let us now do our workings. Let us do our workings here.
Excuse me.
The accessible. Okay, go ahead.
I have a question.
Yeah, go ahead.
The rule says 6 months after year end. Does the rule say 6 months after the year end?
Yes.
Okay.
That is your year of assessment. It is 6 months after the year end. You see, okay, let me even
Because
okay, go ahead. You wanted to say something? The
I
rule
was
did not
looking at
say
the
okay. Go ahead.
okay.
You are saying something. You are saying something. Yeah, finish
I'm
what
listening to
you're
you. I'm
saying.
listening to you.
Okay, so the thing is that
yes,
okay,
I'm looking at the question.
Okay.
Wazobia income statement.
Mm. You know, basis period is different from year of assessment too. Are you getting my points now? Your year of assessment.
Exactly.
So what your year of assessment is saying is that when we search, when we search profits be assessed, when is it going to be assessed? And you know, in Nigeria, right, our period of filing annual returns for companies is when it is 6 months after the year end. The issue that we now, the issue that we have in Nigeria is because most companies' year end is 31st of December. That is why you will see that most companies will file in June of the following year. Are you getting it now? So that is when you will be hearing that as it is June that we see many tax consultants that they will be up and running. It is during before June, maybe between January and May, that we see many auditors that will be up and running. Are you getting it now? So you see that 6 months, as when we get to cessation of business, you will see where the law actually specify for 6 months. Do you understand? But in practice, in practice, whenever you are filing your returns, it is 6 months after your year end. That is how it is being done. Because your year 1st of November 2020. So what it then means is that by January 2021, you are expected to file your return. And another thing I want you to understand is that it is not every company that have year ends of 31st December. So there are some companies that their year end is March. There are some companies that their year end is June. There are some companies that their year end is September. So if companies end in September, automatically when we need to find returns, they'll be filing returns in the following year. They'll be filing returns in March of the following year. Are you getting it now? But a company that has year end of March, within that same year, they are going to have their year of assessment too. When we be submitting their reports to the tax authority. But if it's an individual, maybe a business name, a trade, a vacation, so that one is 3 months after the year end. Are you getting it now? Is it clear to you now?
It's clear.
Thank you. So the first profit that we have, the first profit that we have here, when the company commence the business from February to July 2021, so you need to count your hand from the 1st of February 2020 to December 2020, that is 11 months, right? 11 months, then
Yes.
plus 7 months here, that is how many months? That is 18 months. So this
Altogether,
period
we have
is
13 months.
no, we have 18 months. We have
No, we have
18
18
months.
months. We have 18 months. But I thought you are referring to
Yes.
from 1st of February to February next year.
No, 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 no. Till the year end. Till
Okay, it's all
the
right.
year end. Do you understand? So we have 18 months for this. So this one is just only 12 months. This one is also 12. This is also 12. So anytime you have maybe more than 18, I mean more than 12 months or lesser than 12 months. So if your accounting period is not up to the, I mean, if your basis period rather, if the months within the basis period is not up to the total months that profit relates to, you need to prorate. You need to what? You need to prorate. So from here to here, how many months how many months is this? How many months do we have here? How many months is this? February to 31st of May, February, March, April, May, June, February, March, April, May, June, and July. That is 6 months, right? So this is 6 months. So what it then means is that you are going to have 6 over 18 times 22, 5. So what's our answer here? Can someone please help me press the calculator?
7,500,000.
Okay, thank you. So that is for the first year. Then the second year, the second year will be computed from when the first day beginning after this year end will be what? 1st of August, right? 20 2020 to 31st of July 2021. Are you getting it now? So these are our profits here. You will still see that the profit that you have here, the accessible profit for this period, which is 12 months. So this 31st of December, this 31st of July 2021, you can still see it here, isn't it? Are you getting my point now? So this period that we have, you can still see it within this first year. So then what we are going to add now will be 12 over 18 times 22,500. So what is going to be our answer? So our year of assessment here will be 2022. Hello, are you there? What's the answer for the second year?
I'm coming. Sorry.
Okay.
That's 50 million.
So for the third year now, the third year also says that the first day beginning after the year end of the second period. So the first day beginning is when 1st of August 2021 to what's going to be the year end. Year end will now be 31 of July 2022, right? So 6 months after this period will be what? It's also falls in January 2023. So our year of assessment is 2023. So what profit do we have for this? So the profit for 1st of August 2021 to 31st of July 2022 is just 12 million. It's 12 million. So there is no need for operation here. There is no need for operation here. Okay, let me so that it can be done. Twenty 2023 year of assessments. This will be 1/8/2021 to 31/7/2022. So this will give us 12 million. So for the subsequent year, we also have 1 of August 2022 to 31 of July 2023. So the year of assessment will be 2024. So what's our profit for this accounting period? Our profit is 4.2. I mean 14.2. The following year, which also starts from 1st of August 2023 to 31st of July 2024. Our year of assessment will be 2025. So what is our accessible profit? 17 million. Is this clear?
Yes, it's clear.
So any questions so far? So let's just take one more let us take one more question before we move
I have a
to.
question.
Okay, yeah, go ahead. Go ahead.
Uh, let's say the accounting year end
Okay.
is 31st of May.
Okay. 31st of May, year
So
end.
what is going to be our year of assessment?
If our accounting year end is 31st of May, right? So
Yes,
it means that our year of assessment, let's say, okay, our accounting year for 2025 is 31st of May 2025. So our accounting year end will also be 2025. Do you know why it's going to be 2025? 6 months after this is still November of that same year. Is it clear to you now?
it's clear to me. So second year of assessment,
Okay. Okay, now before we go there, what should be our date of commencement? Let us start with that one first. What should we take as our date of commencement?
all things being equal. That's why I just asked only that one.
Okay, so if you are going to take this, our second year will now be what? It's going to be 1/6, right? 2026 to 31/5, 2025 here to 31/5, 2026. So our year of assessment is still going to be 2026 because of this year that we have here.
All right,
Is it clear now?
it's okay.
Uh-huh. So any if after counting 6 months, it still fall within that same year, that year is still your year of assessment. So that is how it works. Now let us take another question so that we can from there we can move to another uh basis. Okay, let us look at this. Let me see question. Okay, let me just take the second question. So I will use the third question as an assignment for you. Okay, so we have this question, and the instruction is that we should compute the accessible income for all the relevant years of assessment of Zazu Enterprise. So now we have Baboon is into business of music and register his business under the business name with Corporate Affairs Commission on 5th of July 2020. This is when the business register its name with CAC as Zazu Enterprise. Due to the financial constraints faced by the proprietor, the Zazu commenced the business operations on 1st of November 2021 and decided to make up his annual accounts on 38th annually. The following statement was extracted. So the first thing that we need to identify, our date of commencement, sorry, this thing is sorry. Our date of commencement was when? What was the date of commencement?
1st of November 2021.
1st of November 2021. Our accounting year end,
30th April annually.
yeah, 30th April annually. Yeah, thank you. So now we need to now compute our accessible profits, right? So what's the name of the company? That's the first thing that we even need to do first. What's the name of
Zazu.
the business?
Zazu
Zazu
Enterprise.
Zazu Enterprise. Accessible profits for the relevant years of assessment. So the business commenced operation on November 1st. So you can see now that this is November 1st, 2021. This April has already passed before the company commenced business in November. So which means you cannot have November to April of that same year again. So when will you now get the April now? It's going to be 2022, right? So that is the year end. The first year end is going to be 2022. So what we have here, we have year of assessment. We have basis period. Then we have accessible profit. One of November 2020 what? 2021, right?
21 years.
To 38th of April 2022.
2022.
So how many months is this?
6 months.
6 months. No, this is, yeah, thank you. Yeah, this is 6 months. This is 6 months. So the profit that we have here, the profit that we have here is for how many months? So it means it has to be
But
from the commencement date, right?
yes, it's for 18 months.
Okay, it's for 18 months. Okay. So let us confirm. So from
From November
November
2021
November 2021 to December
to
2021,
30th.
that is 2 months, right?
That's,
The
yeah.
31st December, that is 2 months. Then 2
Mm.
plus the 2022, that is 14. Okay, yeah, that is 18 months, correct. Because we need to, once there is error in the dates, it may distort everything. So what is now going to be our year of assessment here?
2022.
2022. But I need to make you understand something. This is an
I understand.
enterprise. Are you getting now?
Yeah.
This is an enterprise. So an enterprise is 3 months. Do you understand it now?
Okay.
Enterprise is 3 months. Business name, enterprise, or as in is it is when the business is operating as a company, either limited or PLC. That is when you have 6 months. When you get to the session room, you will see the whole information. Are you getting it now? So, as an
Okay.
individual, you are expected to file your returns on or before 31st of March. Are you getting it now? That is for payee. But if you are not, but if it is not payee, maybe you just decided that okay, your accounting year is going to be December. I mean, sorry, it's going to be, let's say, October. So it means your year end would be October, but when are you supposed to do your assessment? It's going to be the following year, January. So individual business name, enterprise ventures it is 3 months. I hope you understand it now. So what do we have here? We have 3.2. Then it's going, so this is going to be 6. This is going to be 6 divided by 18 times, let me put naira here, 3.2. So what's our answer here?
We have 1 million.
Hello, are you there?
Yes. 1,066,666.
1 million.
66,000. That's 1,066.
Okay.
No,
Okay.
1,066.
Mm-hmm. Mm-hmm.
667.
So this is for the first year. The second year we start from when? It will be 1 of May 2022 to when? 34 2023. Your year of assessment is still going to be what? 2023. So this is 12 months, right? This is 12 months. So this period that you have here, you can still get it from, you can still get the profits. You can still get the profits from this one, from this first 3.2. So and another way you can also know is that you have already seen 6 months here. So the remaining 12 months doesn't really belong to this period. So if it is what belongs to this period, so you also need to prorate. So when we are prorating, this will also give us what? 12 divided by 18 times 3, 2. So what is our answer?
That's 2,133,333.
Okay. Okay, yeah, thank you. That one, April 2023 to 30th of April 2024. Your year of assessment is still going to be 2024. So this is 12 months. We don't need to prorate any other thing because if you come to the if you come to the profit, you will realize that after this period, when this period ended on 30th of April, so what it then means is that this one starts from when? From 4th of May. Are you getting it now? 2020. The whole profit to this period. I don't understand text now. Hello, Abdul, how about there?
Yes, I'm here. It's the network.
Okay. Okay. So I want to believe that you have the understanding about this commencement rule now, right?
Yes, yes.
Okay. So let us move to the next one. Okay. So I'll give you the next one as a question so that you can respond before. Now let us move to the system of business. System of business. The system of business is a situation whereby the business entity ceases operations. And a business ceases operations when there is permanent activities of the business. Voluntary or involuntary depends on the precise circumstances surrounding the topic trade. So we are stepping on a company could temporarily cease a business. That is the case. We don't call it. So whenever a company permanently shuts down the business that they are not longer in that business, that is when you can consider it as a cessation. It should be noted that the cessation of a business should not be mistakenly for short-term, temporary shutdown. So we need to have that understand, because there may be sometimes whereby a business will be going through a restructuring, they may be going through overhauling, maybe as a result of uh, damage to the machines, and they now want to repair everything. So at that point, it may warrant them to close down the business for that temporary period. So the reasons for cessation of business could be as a result of the following: voluntary liquidation. So that is if the shareholders decide to wind up, or if there is also insolvency or bankruptcy. What it means by insolvency is when a company is unable to meet up with its obligation as and when due, and there have been the uh, and there have been the how am I going to put it? So whereby there is a traces, or there is an obvious reasons that is known to people that, oh, this company will not really be able to meet up with their obligations again. So it could be as a result of courts, or a creditors filing for the insolvency or for the bankruptcy. So if there is also a merger or acquisition, there are sometimes whereby a company will want to merge. When a company merge, it means if you have company A, if you have company A and company B, so if they are merging, so they will be company AB. So it means that company A will not exist and company B will also not exist again. Are you getting it now? So at that point in time, so there could also be a cessation. And sometimes if it is an acquisition, A is acquiring B. And when A acquire B, A may decide that the business that B is doing, they don't want it again, that they want to bring another business and all those things. So it does happen. Then striking of the register. There have been news for over some weeks now, whereby CAC has been announcing that they want to strike off some companies because they've not been filing their returns for many years. So, or maybe there is natural disaster. Section 29, subsection 4 of CIT 2004 as amended requires that where a company permanently ceases to carry on a trade or business in an accounting period, its accessible profits therefrom shall be the amounts of the profits from the beginning of the accounting period to the date of cessation, and the tax shall thereof be payable within 6 months. So this is the 6 months that we have been talking about. So you are expected that after the company operation is ceased, right? So it is expected that you file your returns and pay all the taxes within 6 months from the date of cessation. So you count the date of you count 6 months from the date that the business ceases its operation. But in case of the Personal Income Tax Act 2011 as amended, it requires that where an individual permanently ceases to carry on a trade, business, profession, or vocation in Nigeria in an accounting period, such individuals' accessible income therefrom shall be the amount of the income from beginning of the accounting period to the date of cessation, and the tax thereof shall be payable within 3 months. Can you see it now? So this is where that 3 months is also coming from. So let us take this illustration. JK Nigeria makes up his account to 31st December, and permanently, you can see, you have to look for the word permanently, cease the operational activities on May 31st. So the law says that when you want to compute your accessible profits for a business or a company or a trade or a vocation that has ceased its operations, so what you have to do is that you start from the dates from the you start from the dates that the company normally prepares its accounts, the dates the company normally prepares its accounts to the date of the cessation. So this is when the company normally prepares its accounts, right? So the dates after this will be from when. So the company normally prepares its accounts to 31st. So what it then means is that from 1st of January to 31st of December, that is when the company normally prepares the account. But when it now gets to the cessation, it means the dates after this their year end is when January 1st of the following year to when did the company cease this operation? 31st of May. 31st of May. So this is the basis period. Then the due dates. Okay, let me copy this one too so that it can be well understood. Cessation of business. So for this particular one, we have our year of assessments. We have our basis period. Then due dates for payments of tax. So our cessation period will be from when? 1/1 to 1/1/2021 to 31/5/2021. Then when is the due dates of the payment of tax? When is going to be the due dates? This is a company, right? This is JK Nigeria. Let us assume that it is a limited company, JK Nigeria Limited. So when is going to be the due date? 6 months after. 6 months after is when? November, isn't it?
Yes.
It's going to be 30th of November 2021. Why the year of assessment will also be what? It's also going to be 2021. That is the basis period. Then we also have another one here. Okay. So we also have another question here. Okay, so we also have this question. Demand Ventures makes up his accounts to 31st of August annually and permanently ceased operations on 30th of April 2023. So when is our year of assessment, our basis period, and due dates for payments? So I want you to give me the response.
Year of assessment is 2023.
2023, okay.
The basis period.
Mhm.
The basis period is 1st of September
Exactly, 1st of September.
to 30th April 2023. And the due date
Mm,
May, June, July 31st July.
Thank you very much. 2023. So that is that. Now, let us now discuss about the terminal profits. But before terminal profits, receipt and payment after cessation of trade or business, where a company which has permanently ceased to carry on a trade or business subsequently receives or pays any sum which should have been included or deducted from the profits of that trade or business, if it had been received or paid prior to the dates of cessation, such sum is treated as having been received or paid on the date of cessation. So what we are saying here is this: you are already filing for cessation, right? And when you are filing for cessation, so let us take for instance that after the oath, because you cannot just say that you want to cease your business, you must have written a letter, you must have gotten the approval, all the necessary things must have been done. You must have done the winding up process and the rest. So let's say after all those activities have been done, your cessation date is now 31st of May. So between 31st of May, you have till 31st of August, right? So what you are now saying is that any money that you received, between, let's say, June, July, August, what you are saying in essence there is that after 31st, once you file these returns, it means that you will not have any bank account again. You are not expected to have you are not expected to carry on any business again. But we are now saying, okay, in the process of you waiting for that 3 months, you are still preparing the accounts and everything. So you now receive some payments, or you also make some payment. Let's say you received it in July, or you even received it, let's say, in August, very early of August, let's say maybe on the 2nd of August. So all those payments will be assumed that you receive them on 31st of May. Are you getting it now? So that is what this part is talking about. And if this kind of issues now arise, how do you address them? So that will now bring us to what is known as terminal profits. So this could be described as the amount of profit or loss recorded in the financial statement of the entity for tax purpose after the date of cessation. Any income or expenses made after the cessation date will be adjusted on the terminal profit of the business. So this may include additional expenses incurred during the cessation of the business, such as liquidation expense, previous expenses that maybe you now just paid, then winding up expense, income received either from previous transactions, written off expense, income realized in the process of liquidating the business. So the above income or expense must be adjusted with the terminal results, regardless of their dates of occurrence. Are you getting it now? So regarding the date of their occurrence, so you must have that terminal profit. So, and when you have the terminal profit, what you are supposed to do is to adjust for them. So that is, and how are you going to adjust for them? You have, automatically you must already have your amount, which is the profit as at cessation date, as a date of cessation. Then if there is any additional expense incurred, maybe for winding up or so, you recognize it. If there is any previous expenses that you have not paid in the past too, you also recognize it. And if you also generated another income within the process, you also recognize. So then you now have your adjusted profit. So it is this adjusted profit that will now be assessed to tax. Now let us take example from here. Okay, this one is much. Let us use this. See the final. Okay. So what's the requirements? We are required to compute the accessible profit for all the relevant years of assessment. So that is what we are asked to do here. Okay. Can you see everything?
Yes.
Okay. Okay, so let us go through the question together. The Merchant Nigeria Limited, a company located in Bendel State of Nigeria, commenced operations on 1st of September 2019. The accounting year end was 31st July. As a result of the shift in government policy on the importation and failure to receive the foreign investment loan, the going concern of the company became threatened. The board of directors and the shareholders decided to permanently shut operation on November 24. So the first thing that we need to identify here, we have a commencement. So we have two in one question here, commencement, and we also have cessation. We also have cessation. So the adjusted profit for the year to cessation dates are as follows. We have period to year ended, then period two. So this is when the business was finally shut down. You are provided with the following additional information. Bad debt in the sum of 225,000, which was written off in 2023 year of assessments, was recovered in May 2025. A sum of 35,000 naira was incurred to recover the debts. An expense of 450,000 naira incurred in 2024 year of assessments in the 2024 year of assessment, although taken into account in the statement of comprehensive income, was not paid until August 2025. On cessation, the revenue the revenue authority intends to conduct a back DT audit and the taxpayer has been duly informed. As a tax consultant, you have been invited to ascertain the assessable profit for the periods covered by the commencement and cessation of the business. So you are asked to do 2 in 1 question here. So what's the name of the company? The name of the company is the Merchants. The Merchants Nigeria Limited. Accessible profits, computation of accessible profits for the relevant years of assessments. So we have our year of assessments here. We have our basis period. Then we have our accessible profits. Okay, in our first year, we learned that the business commenced operation when commenced business operation on 1st of September 2019. When is the year end? 31st of July. It can't be in 2019 again. Do you understand? So because September has already gone before this, I mean, July has already gone before this September 2020. So when is it going to be our year of assessment? It's going to be 2021. Let me write this one here because of the So what's the total profit that we have for this one? So it means that this profit that we have here is from September 1, right? It's from September 1, 2019 to 31 July 2021. How many months is that?
4 months.
No, it's not going to be 4 months. From here to this period, this is 4 months here, right? Then in 2020 we have 12.
11.
Then we also have 7. So these are many months now. 20, 23 months, right?
Yes.
Okay. So this is going to be, and how many months is this? This is 11 months. So it's going to be 11 divided by 23 times, what's our profit? 37. What's our answer?
That's 1,769,565.
So the beginning dates after this period is when 1st of August 2021 to 31/7/2022. So our year of assessment will be what? 2023. So what is going to be our profits, our assessable profits? This is 11, this is 12 months, right?
Hello.
Is-
Hello.
Hello, yes, I can hear you. I can hear you.
What happened to 2022 year of assessment?
Oh, sorry. This is supposed to be 2022. Supposed to be 2022, not 2021. Is it clear now? Wait, I think there's error in these are computations. I need to compute. Apologies. So we have 1st of September 20 1st of September 2019 to 31/7/2020. Exactly. 21/7/2020. So this will be, it's still 11 months. Are you getting it now? This is still 11 months, which is correct here. So just that it was date that was wrong. So this will be 2021 year of assessments. Then for this one, we are also going to have from
2022.
August 2020 to 31/7/2021. This will be 2022 year of assessment. So then the computation will be what? 12 divided by 23 months times 37. What's our answer?
Uh, 1 million.
Okay.
Okay, let me say 1,930,000. Sorry,
Are
me
you
I'm
sure?
not.
Are you sure this is correct? I'm not sure.
1,930,435.
Okay. Okay,
Yes, yes,
435.
435. Yeah, exactly.
For the third year, we are going to have 1 of August 2021 to 31/7/2022, and our year of assessment will be what, 2023. Year of assessment will be 2023, which is this. This is the accounting year end. The accounting year end is also 2022, and the profit for that period was 2.3.
Hmm.
The subsequent year will also be what, 1/8/2022 to 31/7.
December.
No, not December, it's July
Okay.
2023. The year of assessment will be 2024. The profit to this year end is what, is 2.6. The following year will also be 1st of to 31st of July 2024. The profit to this year end is 3 million. Is 3 million, yes. Now, we also have for 2020, so this is going to be 2025 year of assessment. In 2026 year of assessment now, so we're also going to have 1/8/2024 to 31/7/2025. But before that, when was the cessation period? November
November
2024.
2024. That's
So
what I
it
wanted
means,
to look at.
yeah, so we cannot have this 2025. It's just going to be 30 November 2025. So if you have this, this is the total profit that you have from August, right? From August 2020, from August 2024 to November, which is 2,850. But you are not just going to bring it here. You need to compute if there is any going to be terminal profit. So since we have some income and some expenditure that was also incurred during that period, so what the law is saying is that it should be assumed that any profits or any expenses that happen after that period will be also be recognized on the date of cessation. So you are now going to say, okay, computation of terminal profits as at cessation date is how much? This is 2,850. Are you getting it? Then from the additional information, we have a sum that was incurred for recovery of debts. So we now say that we have less cost of debt recovery. How much is that one? 35,000.
Hello, sir.
Yes, I can hear you.
The basis period, the last part of the basis period,
Mm.
I thought it's supposed to be 2024, not 2025.
2024, yeah. Thank you for the attention. Bad debts recovered. Okay, bad debts in the sum of 225, which was written off. This one was recovered. Then we also have an expense of 450,000 was incurred in the year of assessments, although taking account. So this expense now, we have additional expense paid 450,000. What else? That's all for this. And we add together. So this one will give us 485,000, isn't it? And we put into jackets. Then we add bad debts recovered 225. So what's the total here? What's the total here? Can someone help me to compute? Are you doing the addition?
We have 2,590,000.
So this is what we are going to have here. 2 million. So this is what we're asked to do. That's all. So which means this is also going to be 2025 year of assessments. Because if you count 6 months after this period, it's going to fall in 2025. So this is also going to be, which means that in 2025 year of assessments, during 2025, the company will file 2 returns. Do you understand now? So that is what we are asked to do here. Any question at this junction? Any question at
No question.
Me, I'm not understanding. Maybe because of say I'm not follow since. Because
okay, so
my data, yes. So even the question self, I'm not taking the questions, so, but I'm lost. I serious.
okay, so where do you want me to recap? Let me just where do you want me to recap? Is it from the commencement through or everything is what you don't understand?
You know when you are trying to uh, uh introduce the last topic, so my data
Yeah.
was
Yes.
extracted, so I need to just try to buy another data.
Okay.
So
Okay, so
don't
is
let
it
me
okay now?
disturb the other. So let me
No, no, no,
just
no, 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 don't worry. So what I'm just going to do is that I will pause the recording here so that I can quickly just take you through. So because it will not make any sense for you to be on the call, and at the end of the day you are not getting anything. It doesn't make fine. Even let me just try and do some little explanation. Then when you now go back and watch the recording session, I'm sure you are going to get it more. Do you understand what I'm saying?
yes. Thank you
So
so
just
much.
hold on, please. You're welcome. Just hold on.